feature for today's session and every other session we've been having. So if you're French speaking, we have a translation feature button right here on the Zoom. You can click on it to get the English transcript of today's session and every other session that you have missed or you are watching, you are rewatching again. Just to go right into today's segments, we have our facilitator in the room. Just permit me to quickly read his profile before we go straight into today's agenda. So our facilitator today is Adeyinka Adegosi. He works at Leap Africa. Just going to quickly read his bio before we go in. Adeyinka Adegosi assumes the pivotal mantle of finance and admin coordinator at Leap Africa. He is an impassioned advocate for financial literacy and inclusion, seamlessly fusing his skill sets with a gift for effective communication. He stands as a venerated source of knowledge, equipping students, youth, and professionals at various echelons with enlightening discussions on financial management and the financial management, taxation intricacies, leadership paradigms, and organizational efficiency, I beg your pardon, and transformative role of technology within the financial landscape. In his capacity as a financial modeling and valuation analyst, Adeyinka collaborates adeptly with multidisciplinary teams to construct intricate models unearthing salient trends that inform strategic repositioning initiatives for the trajectory of Africa's future investment, particularly with regards to financial inclusion of young adults within tertiary institutions. Currently, Adeyinka is engrossed in the scholarly pursuit of a thesis in accounting as a prerequisite step towards the attainment of a master's degree from the prestigious University of Lagos. Beyond this academic milestone, he harbors ambitions of embarking on a scholarly odyssey, citing his sights on a doctorate in finance, driven by an unyielding thirst for knowledge and a relentless dedication to the field. This is such an amazing bio, like so packed. Without further ado, we have Adeyinka Adegosi in the room. Can we please give him a virtual applause as he comes up to take his session?
Hi, thank you.
Virtual applause, please. Hi, Adeyinka.
Hi, Vicky. Thank you so much. What an honor. So I'm just going to, I think I'll try to share my screen now. Then hopefully from there you can see my face. Then we can go on and on and on. So just forgive my camera this morning. Forgive. I found it a little bit difficult getting in here, but now that I'm here, we can go forward. Good morning, everyone. Good morning. It's so nice to be here. I want to say a big thank you to the YDOS team, to Shaggy and to Victoria and to Leap Africa in general. And I just want to say I am honored to be here. And as many people that are on the call this morning, I just want us to listen attentively. I'm a bit of a fast talker, but I'm a great teacher. So as I'm facilitating this morning, I just want you to listen. We're going to get into financial management in three cases. It can get a little bit complicated. If you have questions, don't hesitate to ask me. Just in a couple of minutes, I'll be sharing my screen. Then we go on and on and on. So this morning is just going to be a great time for everybody. So we are just going to continue to I hope you can see my screen. Are we together? If you can see my screen, can I just see a yes in the chat box? A yes in the chat box, please, so that we go. Okay. So before we go on, there's this there's this quiz I like to when I want to talk about financial management. There's this quiz I just oftentimes like to resort to. It's very popular. You might have seen it before. So I'm just going to go on and start from there. Then we go on. So a guy goes to a store the previous night and robs their cash box of 1,000 naira. Um, and by robbing the cash box, he left. The next day, the guy got back to that same store um, and purchased bread with that 1,000 naira and got a change of 300 naira. Do you know how much the store lost? Can anybody tell me? How much did the store lose? How much did the store lose? The guy went into a store um and stole 1,000 naira the previous night and went back to the store the next morning to purchase bread worth of 700 naira, paid the same 1,000 naira he stole and got a change of 300 naira and walked away. How much did the store lose? Anybody in the chat box, just so that I know that you're with me. 1,000 naira what? Okay. I see 1,700, I see 1,000. Okay. I see 2,000, I see 1,000, I see 700. Okay. I see 2,000. Let's keep it coming. Let's keep it coming. We're over 30 on the call. I see 1,500. Okay. 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 So just so that because of time, I need to time myself. I see 1,700. I see somebody say, let me say 500. Interesting take. Interesting take all round. But the important thing is that the guy did not lose 1,700. No, they did lose. The store did not lose 1,700, rather. No, they did lose 500. The store lost 1,000. It's that same 1,000 that was stolen that was lost. Um, because if you are stolen the 1,000 and gone to another store and bought bread and got a change, there will be no loss to the new store. So in trading, that store did not lose. They only lost in the cash that was stolen. So it's still 1,000 naira. Now that I know that you're with me, let's go on. So I'm going to be talking about financial management practices and organizational systems for enterprises. And I know that as we come into our business and we do the things that we do, the all the goals that we have, all the settings that we have, all our plans, all our innovations, and we receive grants for them, we receive this for them, we receive support for them, whether equity on our own end. There is need for proper financial management practices, an organizational system that is going to sustain you. There's something in accounting now we call sustainability reporting. Is a new standard, S1 and S2, that is very important, not just for people, because we want to assume that setups, organization can be a going concern. So one of the reasons why organizations will be sustainable is strong financial management practices. So I'll just go on from here. So today I'm just going to be speaking on financial management, delegation of authority, regulatory compliance, and risk management. This is going to form the core of my discussion. So I just hope that you stay with me clearly, and we go at the speed of light. I have less than 1 hour. So one of the things that we must know from time to time is that financial management process usually always designed to improve the organizational process, the systems and the structure. And one of the things that we need to know is that this process usually helps to outline steps to be taken in order that the operations of an organization are discharged effectively and efficiently, weekly, monthly, or quarterly, or anyhow you want to have it, on the financial deliverables. Financial management, of course, involves planning, involves organizing, involves controlling, involves monitoring your financial resources. The financial resources of your organization are the things that will propel you. We don't grow big to manage well. We manage well to grow big. So financial management is managing your financial resources, and in controlling, there are different complexities, there are different bottleneck constraints, there are different what will I call it now, different things that happen from time to time on different level and with different audiences, that makes it extremely difficult most times for organization to achieve maximum output or maximum control when it comes to financial management and within the organizational structure. That is why there is need for delegation of authority. And in the objective of financial management, I'll be talking about clarity, I'll be talking about structure, and I'll be talking about compliance. So let's just quickly go over them. Now, what is financial readiness? Let's just talk about that. What is financial readiness? Um, One of the things that we must understand about financial readiness is your investors, are they interested in ethics? See, there is no, when it comes to finance, it's not just about the numbers. It is about, is it being done ethically? That is why we have the principle of TAP. We have a transparency, accountability, and probity. So you first begin when you say, oh, am I financially ready? Am I ready to commit to financial management? The first question that you ask yourself is ethical questions. And why you need to ask yourself ethical questions is because from time to time, you will find yourself in what we call ethical dilemma. Your business, your settings, your structure, your processes, most of the time will continue to verge to delirium on when it comes to ethics, because you want to choose, you want to select, you want to take the best possible outcome of a situation while maintaining integrity, while maintaining probity, while maintaining accountability, while maintaining transparency. So we must know that fund investors are always interested in learning about ethical practices. How unethical behavior in your industry is described? How do we deal with corruption and bribery situation? And what are the ethical standards we'll look at? We'll be looking at to uphold the ethical principles so that you'll be able to build trust with your donors, with your partners, with your beneficiary and the community, so that you demonstrate integrity. This is the bedrock of financial management. Even the Institute of Chartered Accountants of Nigeria, for example, they just have the motto is just two words: accuracy and integrity. There is no financial management without integrity. And integrity speaks to the ethics side of business. So you must demonstrate integrity in all aspects of your project and to enhance the credibility of your organization and the project itself. No matter the project you are on, no matter how minute or how infinitesimal the funds that are given to you are, you must encourage yourself from time to time to say, I stand on the core value of integrity. And you must consider the ethical and legal implication to ensure the organization long-term sustainability. There are certain things that you must know, that anytime you act unethical, it affects the organization and there are legal implications if you're caught. So while setting up a financial management system, one of the things that you must know is that you must consider the legal implication. In case you've not heard, you can do a case study research of organization like Enron, where they are breach in ethical duties. You look at pharmaceutical, look at whistleblowing policies all over the world, and you look at organizations that are fall into that trap. So you just look at these things, and credibility also can make or break an organization. Still talking about financial readiness, we have the board. You must set up your board of directors. We are looking at the structure of your financial management. Set up a board of directors. No matter whether you are working towards an SDG goal, whether you are starting up a project, whether you are starting up a non-profit organization, whether you are starting up a business on your own that makes profit, no, whether you are an innovator, a social innovator, no matter who you are, don't act alone. Don't act alone. Always set up a board of directors. Always set up a board of directors, and you create board charters. You set up different committees. So set up a board of 7 people, people that are way experienced than you, people that have different knowledge in different area, expertise in different area. Gather them together. Say, we would like you to be part of our board of directors. When you make a decision, go to them, leave them, give them the opportunity, or surrender yourself to them. Well, I would say, I'll use the word submit your dictates to them. Let them consider, let them make the best decision for the project or for the organization or for the business. It helps you, and you regulate business proceedings. Financial transparency. Maintain transparent financial records and on the go regular. I've told you that the whole financial management is based on the foundation of TAP. It's based on the foundation of transparency, of accountability, of probity. You need to understand that when you don't maintain accurate financial record or transparent financial record, there is no way you yourself can know the position of the business. For example, there is a statement that we call in accounting, we call it statement of financial position. Most people call it balance sheet. That's the whole name. But now it's called statement of financial position. Without a transparent financial record, you would not know where you stand. You would find it difficult for your business also to say, this is where I stand. Because you don't even know your financial position because you are mixing the numbers. You must also have a transparent practice and instill confidence in all your donors, all your partners, and this will contribute to sustained and continuous support for organizations. You should always do that. I'm just going to cite an example. At Leap Africa, for example, we also, as we are building the ecosystem, and as we are positioned all over Africa to help other organizations within the non-profit ecosystem to build them and to make them robust. We too, we have people that feed us, organizations that feed us. And for example, we submit timely report from time to time. When we submit reports to our funders and to our partners, we don't submit report and just input numbers. When we are submitting report, we are putting each line item of our report or of our budget. There is a receipt element for it. We are not just doing, okay, 2,000 naira for, no, we are not doing that. For that 2,000 naira, there's a receipt. For every 10,000 naira, for every one kobo, there's a receipt. Is so when our partners are looking through our reporting schedule or our reporting template, they can find, okay, oh, there's an accommodation here, the renting of an event hall. They see 10,000 naira. They look at the receipt, they see 10,000 naira. Wow, these guys are transparent. And transparency and integrity will strengthen your position and will help you to attract more funding. And when you are in this kind of service lane, you are serving humanity. I want to tell you that aiming for profit or trying to cut short certain things will affect you. And when people go and say, oh, we I did not get this grant, I did not get this thing, at times your numbers are falsified. At times your numbers are inflated. At times your numbers are not right. At times your numbers are manipulated. At times your numbers are creative. You have called a chief accountant, we call it creative accounting, a chief accountant to do your numbers for you, and it is not realistic. So you must know that transparency and integrity is your strength in this service lane. It is your strength. Let's just go on. So let's look at policies in financial management. These are the things that you must have as an organization. You must have on your project. You must have your financial policy. You must have your investment policy. You must have your procurement policy. You must have your anti-money laundering policy. You must have your fixed asset policy. You must have your asset disposal policy. And you must have your whistleblowing policy. I hope that I am able to just give me a minute, please. Sorry about that. I hope that I am able to communicate these things to you in the most accurate way that I want to communicate them. So one of the things that you must have all these policies. The most important of all these policies is your financial policy. Most of the time, because of the structure of organizations, you will find out that, oh, maybe you are not even investing the funds, like you use up your funds. Your own is just like a just-in-time system, so you use up your funds immediately. You might not need that, but your financial policy, your procurement policy, your anti-money laundering policy, very important for people that move from place to place, that are nomadic in nature. You would find out that, oh, you might not need a lot of fixed asset policy, but those areas that I believe that you must pay attention to: your financial policy, your investment policy, your procurement policy, and your anti-money laundering policy. So let's just go on. Let's talk about process areas when it comes to your financial policy. This is your financial policy. We are talking about process areas. And because of different countries are represented here, so just permit me to take Nigeria as a case study, then we move on from there. So your process areas, you must talk about your financial accounting and record and documentation. How is your financial accounting done? One of the things that you must know is that no matter how difficult it is, get an accountant, get a certified accountant, get somebody that has knowledge of accounting. It might not be easy for you. You might think that it is not cost efficient, but you can have your friends that are accountants that can support you on your processes over the weekend. It's not compulsory you hire an accountant and you pay a huge sum of money. You can get people that would volunteer to work on your finances. You can get students, maybe 400 level students or people in their final year to support you. And that can work. So you must ensure that your financial accounting and record documentation are sorted, your subsidiary financial record, your transaction approval and their timing, your project coding and your cost accounting, your period close process, your performance reviews, that's your financial reporting, your budgeting and your forecasting, your in-kind donations, your audited financial statement. Don't be an organization that does not like audit. Don't be an organization that just wants every time, oh, no audit for me. I just do. No. Make sure that an external organization audits you and your regulatory compliance. For example, in our country, Nigeria, we have SCUML. That is the anti-money laundering policy. It is by EFCC. We file pension, payee, withholding tax, VAT, all those kind of things. You make sure that you are compliant with the laws. Don't say that, oh, I am not conversant with the law of the land. That is why you need to get a certified accountant, a proper accountant, and your fixed asset schedule, your cash flow management, your reconciliation. Let's just go on. Your supporting document. One of the things I would like to tell you, please, are you with me? If you're with me, just type yes, I am with you in the chat box so that I know that you're with me and I don't keep talking to myself. Oh, great. Thank you, Abdullah. Thank you, Enoch. Thank you. Ayodeji. Oh, thank you. Okay, great. Now, supporting documentations. One of the things that you must know and you must not play with when it comes to finance is your supporting document. Your supporting document are as important as the money that you send out or you receive. Your supporting document are what we are going to see, and we are going to say, oh, yes, you incur this transaction. In finance, we don't care whether you send money out or you receive money. That's none of our business. What is the most important thing about financial management are the supporting documents. So you tell me that you paid 1 million rand, for example, 1 million South African rand for 1 million South African rand for, let's say, for a land. And you are telling me that you don't have the document for the land. I would not believe you. So it does not matter the inflow and the outflow. What matters is the invoicing, the receipting, the timesheets, the contract, the SLA, the service level agreement, the working budget. You need to understand that in finance, what is important is not just the cash flow. It is the supporting document. So don't play with supporting document. Don't let people tell you that, oh, I take transport from this place. There is no receipt for it. Don't allow that. Don't allow people to say, oh, I'm going to take the bus. And as I'm taking the bus, I'm not going, that the bus, they will not. Don't do that. If it will cost you to painstakingly tell your guys to take a boat or a Uber or whatever transportation system that you use in your country, and so that they can get a receipt, it is better. It helps processes. It reduces a lot of mismanagement of funds, and you can easily track. Do you get that? So let's go on. So why use a policy and a procedure manual? Why do you do that? Why do we need all these things? What you're saying, Adinka is just talking about this, is just talking about that. Why do we need to use a policy and procedural manual? Why do we need it? One, to ensure that all staff are aware of the obligation in relation to finance transaction within the business. Let me give you an example. In Leap Africa, for example, though we are a large organization, so our financial processes are more cumbersome, and we put a lot of controls in place. But in Leap Africa, for example, people don't come to finance and say, finance, I want money. They don't. They are aware of their obligations to, we use our ERP system is Oracle NetSuite, for example. They are aware of the obligation that they go to Oracle NetSuite, they raise a request, whether in form of a purchase order, in form of a cash advance, or in form of an expense report. And it just goes through every approval line before it even comes to finance. And that's the way it is. They are aware of their obligation. And in your organizations too, are people aware of their obligation? When they need funds for something, do they know what to do? They don't know the right channel to send a mail to. So when you come into an organization as a new staff, there's something we call onboarding section. That onboarding section helps you to know. I take an onboarding section for finance, for example. In that onboarding section, I tell the new employee or my new colleague, for example, everything that is needed for the person to know when it comes to finance. When people come to your organization, when people come to your setup, when people come on your project, do they know what they are supposed to do? Do they know their obligation? Do they know that this is how we request money? Do they know this is how we retire funds? Do they know that, or they just come and they just spend the money every way? So we must understand that it is very important that we pay attention to these things. Two, due diligence and internal control. There is a need for you to put internal control in place. There is always a compliance test for your controls. What are internal controls? I gave an example of Liverpool, Africa, for example. When somebody raises a purchase order, the internal control says that it goes to the first level supervisor, the person approves, then goes to the procurement officer. The procurement officer looks at it, gathers invoice, gathers checks, procure, checks, source, and gathers enough evidence to give us the best price, doing a cost-benefit analysis. At that point, it goes back to the second level supervisor, saying that, oh, this is what the procurement has done. Do you agree with this? Is this in line with your budget? If the person says, all well and good, it goes to the senior management, the executive. If they approve, then it comes to finance. It might look like a rigorous process, but that is internal control. That no man is single-handedly sitting on the finance processes. So for me now, as a Leap Africa person or somebody that works in finance, one, I cannot suggest vendors. It is impossible for me to suggest vendors. It is, when I do that, it is a conflict of interest. Two, all other people in the organization outside of the finance department can purchase assets from the organization. I, in the finance team, I cannot. Even if the organization is disposing an asset, I cannot purchase it because I am in the finance team. Anybody else can buy. That is internal control. Because as the finance person, I can say, oh, this asset is worth 10,000 naira. And the asset is worth 100,000 naira. And I buy it for 10,000 naira. So Leap Africa will not sell to me on no account. Those are internal controls. It just helps us. Also, the reason for policy and procedural manners is that is a proven way to help your managers and your supervisors make consistent and reliable decisions. People used to wonder like, okay. This person, I know this supervisor, he's always making this decision. Do you know why? There is a manual. He's steady. He's not saying, oh, Agatha, I'm going to allow Agatha to have this. And say, Abdullah, no, don't have this. Favor, don't have this. And it says, oh, but you are very biased, sir. And say, Sasa, no. I'm going to give it to you because I like you. Or he says, Obed, you are my guy. No, when there's a financial policy and a procedural manual, it just helps. It helps to give each employee a clear understanding of what to expect and what to allow. For example, at Leap Africa, there are some things that I allow. There are some things that I expect. There are some things that my friends allow, my colleagues allow. There are some things that they expect. For example, at Leap Africa, we have the payment days, Tuesdays and Thursdays, for example. Victoria or Oluwaseyi, for example, knows that Adeyinka, on Tuesday, if I have a PO with you, you should pay it. So if by Wednesday morning, their money is not to their vendors, they can come and hold me and say, Adenka, the procedure manager said you pay on Tuesdays and Thursdays. Yesterday was Tuesday. My purchase order was already approved. Why was it not paid? This is very important for your organization. And also, this helps to raise awareness amongst employees. So people are just aware. People know. They are aware. They are not lost in your organization. Let's just go on. So let's look at budgeting. Budgeting. You know, one of the things that we must know from time to time. Okay, let me just ask a question. Are you with me? I like people to stay with me. Are you with me? And because of my time, it's not going to be an interactive class. Yeah, thank you. Thank you. Are you learning one or two things? Are you learning? Are you getting informed information that is going to help you make a wonderful decision? Okay. Okay. Thank you. Thank you so much. Thank you. Thank you. Oh, great, great, great. That's the most important thing for me, that you learn and I learn also. Okay. Let's look at budgeting. Let's look at budgeting. So before anything, for you, always budget. And we don't like to budget because we don't do that personally. So we import that personal settings and personal what will I call it? Personal idiosyncrasies into organization. And what is budget? In a very layman way, I would just say budget is the parameters that you set for yourself. Remember when you were young and you had parent or you had a guardian, and they will tell you, don't go beyond this place. If you're playing in your surrounding, they'll tell you, don't go beyond this place. If there's a well, they'll say, don't go beyond this place. So if you go, you fall into the well. That is not budget, but that's a parameter. But budget are just financial parameters. Let me put it that way so that you understand it. Financial parameters that you use to allocate available resources. You're saying that every time you want to do anything in your organization, make sure there is a budget for it. Don't do things that are not in your budget, except they are very important, except they are extraordinary, they are exceptional to the ongoing course or the ongoing vision and mission of your organization, and they are expedient and needed in that moment. They are expedient and needed in that season. They are expedient and needed in that time. Don't just say, in our organization, we need a boss. But do you have a budget for the boss? How much do you want to spend for the boss? So if, for example, the boss is not in your budget and you know that your staff strength is growing and the cost that you will incur in rentals and they are so exorbitant, then you can, okay, let's have an exceptional approval for it. Let's talk to the board. That's why it's very good to set up your board. So you not just wake up one morning and make a decision by yourself. So you have a board. So budget preparation is very important. Preparing budget to ensure that all cost components are accounted for. That is the essence of budget. Your costs are accounted for. You don't just wake up, like when you go to shop. I don't know how many of you do this. You go to shop, you have a list, and you have money in your pocket or on your card. And as you are shopping, for example, you just find out that, oh, I see this shirt. I really like this shirt. This is nice. I like this jacket. But there's no budget. The jacket is not on your list. You are just buying. By the time you get home, you look at your list and say, wow, this is not what I intended to do. Spontaneous shopping. Thank you, Caitlin. This is not what I wanted to do. You're just pew, pew, pew. And you're wondering, like, and you get home. How did I spend this money? What did I buy? My God. And you look at your list and you say, what you wanted, you've not even gotten it. So you're just saying to yourself, what am I going to do? So that is how it is in an organization too. For example, at LEAP, we know the number of people that we are supposed to take in an organization during a year. For example, our recruitment process at LEAP Africa has closed for the year. We cannot take anybody this year again. Everybody that needs to be taken has been taken, and that's the end. And that's all. Because there is a budget for staff strength. There's a budget for human resource. And we don't go outside of that, or else it's going to crush the organization. Do you get that? So it's very important that you prepare your budget. and you prepare your budget accounting. One of the things that people don't like when they are preparing their budget is not writing the cost of an item. That's that we value cost. There are 4 ways that we value cost. In accounting, we have historical cost. We have the current cost. We have the market value, and we have the fair value. So there's something that we do about valuation. Now, when you want to prepare your budget, what is the market cost of this item? What is the historical cost? What is the current cost of this item? Current cost is usually the future price of an item discounted to the present value. And what is the market value? When you ascertain that, you add macroeconomic indicators. You are looking at things like inflation. What is the inflation in our country? What's the inflation rate? What is the lending rate? You look at that. That is how what would tell you to say that, oh, this thing is important. Let me give you a scenario. Last year, when we were making LEAP's budget, there is a particular department that, had a budget. And I remember that I minuted on that budget, telling the manager that, please, sir, can you allow for inflation? Can you just add inflation, the inflation rate, multiply this cost by the inflation rate, increase it by the inflation rate? I don't know if the manager saw it or the manager did not, but the manager transitioned out of the organization early this year. Then the person that took up the project in June 21st to be precise, exactly 6 months later, the person saw the budget and said, I wish I saw this, Adeyinka. I wish I saw it. Because now the cost of that item has spiraled beyond their budget. Though they have the item in their budget, but the cost is not where they can ascertain it anymore. It's beyond them. And if they are going, and that item is very important to their project, and if they are going to go on with that item, they need exceptional approval, which comes from the senior management team, the executive team, and that's a long process. So when you are creating your budget, don't just say, the book of educational materials is 5,000. I'm putting 5,000. No. The educational materials now in December 2024 is not going to be the same price in December 2025 or September 2025 or whatever your project timeline is. They are going to be a different cost. So you put that. So let's go over to budget management. Budget management involves ensuring that budget is adhered to. For example, in our organization, we have what we call budget alignment meeting. Every quarter, I call the department and I say, what have you spent? Show me your working budget. Show me what you have spent. Then I look at it from my own end with the budget that I have for the organization, with the budget that they have, with how much they have spent. Then we align. That's how to manage budget, to make sure that we stay within the cost element of what we have budgeted for. Because if we don't stay within that cost element of what we are budgeted for, we'll be shortchanging ourselves. We will not be able to, we'll just be spending anyhow. And budgeting is not just for lowering cost for our organizations. When we are spending very low than what we set to spend, it means that we are underachieving. What we do for budget is that we are looking at a variance of 0 when it comes to non-profit organization. If it's profit organization and profit-oriented organization, they are looking at, their variance should be favorable, not adverse. But for non-profit, we are looking at our variance should be 0. That's what we are looking at. We don't want to overspend. We don't want to underspend, because underspending means that we are not achieving our target. Overspending means that we are not utilizing or judiciously and effectively utilizing the resources that have been given unto us. I hope that is clear. So budget closeout process is just accounting for all expenditure to determine whether you have a surplus or a deficit. To have a surplus or a deficit, For example, a donor or a funder gave you $100,000 to execute a project. The funder expects you to execute that project with the $100,000. The funder does not expect you to, manufacture figures or just expend the money properly. One of the things that will help you is that you check if there is a deficit, if there is a surplus, if you have spent. beyond the 100,000 or below. So let's look at procurement process. And I'm just going to use Leap Africa setting for this procurement process. I think this class started 10:30. I came in around 10:40 something, started around that. So I still have like maybe some 20 minutes so that I'm just conversant of my time. Procurement processes. Now, when in your organization, no matter how small you are, have a procurement process. This will help people impose vendors on you. This will help you stay away from things that conflict with the organizational interest. Do you agree with me that there are personal interests and the organizational interest? So one of the ways that we at LEAP we work is to ensure that the vision and organizational interest is above any personal interest. So what do? Procurement process. We want to get anything. We want to buy anything. We tell them, raise a purchase order. Make your request, your requisition, make it. And don't make your requisition 2 days. Don't make your requisition 1 week. Don't do that. Make your requisition 3 weeks prior. We have a budget. We have a plan. We have policies. We have manuals. We have a lot of things. Do you understand? We have concept notes. We have the things that we want to do. We know them. Deep Africa does not go into a year blind. We have timelines. So we know what we want. We know the times that the team is traveling to Kenya. We know, and it's clear. So except for exigencies and extra cases like that. So what do? Raise your purchase order 3 weeks before you need what you need. When you raise your purchase order, your supervisor approves. When your supervisor approves, it goes to procurement. What does procurement do? Procurement, they search for vendors. They go look for vendors for that particular item. Even if you suggest your vendor, they'll just say, okay, but they go and search. They do know your customer. They do that, the KYC process. Then they get at least 3 invoices. So you want to buy something, the procurement officers, they get at least 3 invoices. 3 invoices means 3 different quotations from 3 vendors. They look at the terms of agreement. They look at the rate. They look at the withholding taxes. Then they send whatever they have gotten to the manager for approval, because they will make the decision to go with the best vendor for the organization, quality and cost. Yeah. Then the managers approve. Then the CEO approves. Then it comes to finance for vendor billing and payment. What do? We 70%. We pay 70%, and we pay the remaining balance as at 30% balance. So we don't pay all our money at once for the vendor. So we advance the vendor 70%. Upon the completion of the contract, upon delivery of anything, we pay you the 30% balance. That helps our procurement process. So the procurement team can work. The managers can effectively ascertain that, oh, we are making the best decision. The CEO is in the loop. So nothing is just flying by our own strength. Let's just go on. Delegation of authority. I want to be as fast as I can now, and because of time, I have like 10 minutes more, if I'm not mistaken. So delegation of authority. There is the owner of a tax. There is somebody responsible for a tax, and there's somebody accountable for a tax. For example, in Leap Africa, I think we have a senior finance manager. The senior finance manager, her name is Simisolu Abraham, and I am just next after her, and we have a robust team. Now, in my team, there is the person that is responsible, there is the person that is accountable. For example, financial reporting or whatever reporting, I'm responsible for it. But to the organization, Simi, the senior finance manager, is, for example, accountable. So who makes the financial report? Adeyinka. Who is accountable to the organization on the financial report? Simi. So I am the owner, but I am not accountable to the organization for that tax. So the same way in organization, let there be a proper delegation of authority. Let there be a delegation, and it must be officially recorded. And that is why there's a breakdown, there's hierarchical structure, there's setup. Let there be proper delegation of authority. And don't delegate an authority more than what you possess. For example, I am the finance coordinator for Leap Africa. What the authority that I possess are the authority that the senior finance manager gives to me. The authority that the senior finance manager possesses is the authority that the executive director gives to her, or the constitution of the organization ceded to her. That seeding comes to me. I too can seed to maybe finance coordinator or to finance officers, to associates, to interns, and like the likes. So the same way, you must ensure you, you must ensure that you must delegate. Don't just say, oh, I'm doing everything by myself. No. Oh, there's a question for me. Okay. Okay, thank you. I'm going to answer your question. Commander, I can see that. I will answer later. When I'm just done. So let me just rush through my slide. Thank you. Thank you very much. So you must learn to delegate. Always learn to delegate. Always learn to delegate. And let's just look at ways of making delegation of authority. You must ensure that there is a person. You must have this is a DOA matrix. We use initiate, consult, recommend, approve, execute, and inform. You must know that there is somebody that initiates, depending on your team. The person that initiates can also consult and say, oh, I'm initiating this, but I'm consulting. Then there's somebody that approves the recommendation. There's somebody that approves the request, and there's somebody that executes. If you have the person that executes can also inform. So the execution and the information can be together, and the recommendation and the approval of request too can be together, and the initiate and consult can be together, depending on your organizational structure. You must ensure that. And there's also a financial process delegation. I think I've captured this in my. Let me just look at a stage of a typical financial transaction process. I think this will help us. So there is the transaction initiation stage. Just like we spoke the other time, you initiate, there's an approval stage, there's a verification stage, and there's post-transactional review. Now, very clearly, I'll just make this a wonderful one, by the way. When you are in a financial process, don't let this is the true thing about finances. A financial process is incomplete if it starts and ends with one person. Again, I'll repeat myself. A financial process is incomplete if it starts and ends with one person. Even if you have just one accountant in the organization, don't let the accountant be the alpha and the omega, the beginning and the end of a financial process. Put people into the box. Let people fill in. For example, have a staff initiating a transaction, have another person approving, then let it go to the finance person. I can tell you that in Leap Africa, I don't disburse funds. I don't upload money. I don't touch money. Sheyi is on the call. Victoria is on the call. I don't do that. It's not. I stay away from it. I don't even touch it. We have our finance officer, Amaka. She does that, and I don't even do that. So there is no time in Leap Africa that I touch Leap Africa's money. I don't. Do you know why? Because we have process. What do? I do post-transactional review. That's what I do. I just review the transaction that has gone on, and I review and I review. I don't touch money. I don't send money to people. I don't put money in people's accounts. Even though I'm in finance, it is not my process. Do you get that? And that's the way it should be in your organization too, so that somebody does not start something and ends the thing. So the person knows anything about the money. If the person, even you as the CEO, as the boss, don't do it, or as the lead of the project, don't do it. Don't start a financial possession with yourself and end it with yourself. If you do that, you will steal one day. That's just the truth. You are going to steal one day. You are going to manipulate the figures one day. Do you get that? So let me just go on. standard financial process, financial access system, and temporary delegation. Procure goods and services, approve ledger adjustment, bills approval, journal entries, your financial information system, your payroll personnel, your expense reimbursement, your vendor payment. So regulatory compliance is just complying with the authorities in your country, the authorities in your country. So I think I'm going to stop here because of my time. I want to ensure that I stay within the allocated time. I'm going to stop here. And let me just take the questions. Let me just take the questions. If you have questions for me, do well to ask. So if you are with me, just say yes. And if you have learned one or two, just type, I have learned something. I have learned something. I've learned something. Okay. Okay. Thank you so much. Thank you, Emmanuel. Thank you, Caitlin. Thank you, Abdullah. You guys have been on this side. Thank you. Thank you. Thank you, Ayodeji. Thank you. Thank you. Oh, great. Oh, great. Thank you, Obed. Thank you, Isa. Thank you. Thank you. Thank you for your kind words. Thank you. Thank you. Thank you, Favor. Oh, thank you. Thank you, Rolling. Thank you. Okay. Let me just take questions. There's the how is it important? Yeah, Commander, your question. I'm going to take it now. Now, it is important to conduct end of the year audit. Audit, practically, the essence of audit is to show what we call the true and fair view. The essence of an auditor in the process is for the auditor to show if your account, your books of account shows the true and fair view. So one of the things that we need to understand and we need to know is, why does your account, does your book of account show a true and fair view? Don't you want to know? Don't you want to know whether your financials, they are accurate? Whether that's the essence of audit, accuracy. That's the essence of that's the essence of it, accuracy, to show if your financial statements, if your books of account, they show the true and fair view. It helps you to know. So, for example, you hire me as an accountant and you say, Adinka, do this for me, do that for me, and I just come and I do everything. And when I'm done with everything, I just say, okay, this is the report. And you take the report, hook, line, and sinker. Don't you want to know if what Adinka has done is right? Don't you want another person to review my work? Even in audit organization, there's something we call peer review. An auditor can take a job, and when they are done with that job, because of maybe personal interest or conflict of interest or professional ethics, they go and tell another person, another audit company, come and audit the work I have done. So it is important. And again, sometimes audit are statutory requirement. They are a regulatory requirement in organizations. In Nigeria, for example, the CAC, in Nigeria, for example, the CAC requires that you file your account, you audit your account statement. So there's another question for me. It says, why? Okay, just one after the other. Okay, is it possible that we can get this TPT because it needs to be reviewed? And okay, no problem, gift. We'll send it across. Why are donors requesting for audited accounts they are requesting for audited accounts because once your account is audited, it is certified by an auditor. It means that it is only accounts that are certified by an auditor, financial statements that are certified by an auditor, that we can rely upon to make financial decisions. Any account that is not certified by an auditor cannot be relied upon by external sources. For example, Leap Africa can rely upon my account preparation. They can rely upon my management report. So the management of Leap Africa will rely on that. But if Leap Africa is speaking to maybe one of our partners, let's say like MasterCard Foundation would not rely on my management report. MasterCard Foundation will rely on my audited financial accounts that an auditor has certified to be true at the fair view of the organization or the fair position of the organization. So that's what it is. So what it means is that the external can only rely upon your financial statement if an external party or a third party has ascertained that your financial statement shows the fair and fair view of the organization. Thank you. Okay, how do I justify financial expenses in rural area where there is access to some resources limited? Okay, so I'm just going to answer that. Okay, I'm just going to answer that. So, how to justify financial expenses in rural areas? What it practically means is that you would have to, from time to time, create a sheet where people will sign. You know, when you go to rural areas, you might not be able to get receipts. Some resources are limited. Create a sheet. Whoever is spending should sign, and another person should countersign. That's just it for financial accountability. What amount does auditor and audit? Okay, what it depends. It depends on the auditors. It practically depends on them. It practically depends on them. Practically depends on the auditor. I think that I've answered all questions on my decks. I think I'll just take my leave now. I want to say thank you very much for having me. You can just give a feedback for the section in the chat box. Thank you so much. I want to say a big thank you to the YDOS team, to Sheyi and to Victoria. Thank you. Thank you. So I hope this section was very enlightening to you. Oh, okay. One more question, then I leave. Sorry. Somebody said I'm Caitlin Ude, founder of Caitlin Initiative. Hope. What if the organization is still new, bare new month of being registered, and you handle everything alone? You can't afford to get a professional or paid employee. Is that a red flag? Must auditing be done every year? Yes, auditing should be done every year. Is it a red flag? You are just starting up, so you need to give yourself some credit. How do you do that? How do you give yourself some credit? What you do is you get volunteers. Get your friends to volunteer with you. Just get volunteers. It's not compulsory you pay them. Get volunteers. It's very important. Get volunteers. Get people. You can be your brother, it can be your sister. Just get them and give them it so that it relieves you and helps you to see other aspects of it. What are the potential financial risks and mitigation? Oh, the financial risk is on this slide. I'm going to share with you. I'm going to share with Vicky so that Vicky can share with you. Though you read it on the slide. Because of time, I could not go. Concerning the present inflation rate in Nigeria, how are we going to prepare our budget for in this project? You look at the inflation rate and you multiply the current figure you have. For example, if you have 5,000 naira for a project fee and the inflation rate is, let's say, 20%, you multiply 5,000 times 1.2. That means you are factoring the inflation rate. 20% of 5,000 is 1,000. So the cost of that item will be 6,000, factoring into inflation rate. But you must capture it succinctly and say that considering we have considered inflation rate. Okay, just one more minute. Can a finance officer go through a procurement process? Obviously, yes, you can. You can go through a procurement process. Okay. Okay. I think that I'm done. I'm done. Thank you so much. Thank you so much, people. Thank you. Thank you. Thank you. Thank you. Over to you, Victoria. Thank you, Sheyi. Thank you, Victoria, for having me.
Hi, Adenka. Thank you so much for that session. Please, can we appreciate Adenka in the chat? Can we send him virtual applause, your favorite emojis, or just say a word of thank you to him? Say thank you, Adenka. Okay, I see it coming. Please, let's have it coming. Thank you, Adenka. We really, really enjoyed your session. For me personally, it was good to see that presentation from you, just to refresh some of the things that I knew before. And I'm sure that our participants here had a lot of takeout from today's session. Thank you so much. And thank you for sticking with the time as well. Yeah, so our next session is by 12:45 p.m. this afternoon. We will send a reminder message and an email to everyone that has registered for these classes. Please make sure you join us at 12:45. We have another insightful session and an amazing facilitator at that too, waiting to share his knowledge and experience with everyone. We have to go now. We have another meeting on this platform, but we will reconvene at 12:45, like I said. Please set a timer if possible so that you don't forget. Yes, 12:45 West African time, but we will share the other alternative time for people across Africa as well so that they don't miss out on joining. Once again, thank you for your time. Thank you for logging in. It's been an amazing session. Yes, I would Okay, so I have Shay's hand up. I would allow him to speak at this point. Thank you.
Yes, I just wanted to also quickly mention that folks should reach out to their friends for the 12:45 meeting, because we are also going to be sharing the information around how you can be part of the top 100 that will be getting the micro grant in that session. That was what I wanted to add.
Okay, great. Thank you for that. Guys, you heard today is the day we reveal all the secrets that we've been keeping. But please make sure you join us at 12:45. We can't wait to have you on that call. And do have a lovely morning or afternoon or evening, whatever the case may be. We would share a feedback session for this form on the virtual communities. Please ensure that you fill it. It's very important to us to get that data and to also ensure that we give you the best virtual learning experience as much as possible. So thank you again, and see you at 12:45 West African time. Bye-bye. Yes, this same link. We'll be using the same link. We'll share everything on the WhatsApp group.